If you're like me, you likely have some gripes about the high cost of healthcare and health insurance, not to mention how exceptionally difficult navigating the system can be. Well, one thing I can't complain about is a medical savings account designed to reduce the cost of healthcare. That's a health savings account, or HSA. This podcast will review who's eligible to contribute to an HSA, how it helps you significantly reduce taxes, build wealth, and cut the cost of just about any healthcare expense you pay out of pocket, even if your insurer doesn't cover it. You'll learn how to maximize an HSA's money-saving benefits now and in the future. Hey everyone, welcome back to Money Girl. This is episode 948. I really appreciate you being here and spending time with me. I am so grateful for this community. If you're new here, I'm Laura Adams. I'm an award-winning author, a spokesperson, money speaker, and founder of The Money Stack. That's my Substack newsletter. Subscribers automatically receive my Money Success Toolkit, which includes the exact templates I use to manage my money. You can learn more, ask questions, and sign up for The Money Stack at lauradadams.com. Or you can leave a voice message with your question or comment by calling 302-364-0308. I love to feature your question on a Finance Friday. That's our weekly Q&A bonus edition of the show. So an HSA is a tax-advantaged medical savings account that allows you to pay a very wide range of qualified healthcare expenses like medical, dental, vision, and hearing care costs entirely tax-free. However, the trick is that you must have an HSA qualified health plan, and that always comes with a high deductible in order to qualify for an HSA. And I'll explain more about these health plans in a moment. But the very unique benefit of an HSA is that not only can you spend it, including like your investment earnings in the account, on qualified healthcare expenses, but it turns into something that acts more like a retirement account, like an individual retirement account or IRA, after you reach age 65. And I'll cover the specifics on how that works. So let's talk about the tax benefits of a health savings account. I love these accounts so much because they really do pack a big tax punch, giving you three powerful tax benefits. Number one, they allow tax-deductible contributions. Now, this is up to an annual limit, either per individual or family, depending on the type of health plan you have, and that reduces your taxable income and your tax liability. The second benefit is getting tax-deferred growth. So this happens on any interest or investment earnings in the account. And that means you don't pay tax on them, unlike the interest you would earn in a bank account or, any growth that you would get in a brokerage account, which are taxable each year. So again, this is going to act a little bit more like a traditional retirement account where those earnings and the growth just kind of accumulate in there year to year. However, the third benefit is what's really unique. You get tax-free withdrawals when you spend the funds on qualified healthcare expenses, and that includes the original contributions plus your earnings. That's different from a traditional retirement account where you do pay tax on those withdrawals. So with an HSA, those withdrawals are tax-free if you spend them on qualified expenses. However, after age 65, the rules change and you can spend your funds on anything you like without penalty. So they don't have to be these specific healthcare expenses. And the beauty of an HSA is that contributions are tax deductible even if you don't itemize deductions on your tax return. The funds can earn interest, or you can invest some of them or all of them using a menu of options like investing your funds in mutual funds or exchange-traded funds. Just depending on your provider, you'll have a variety of options. And as I mentioned, your original contributions and the earnings are tax-free when you withdraw them to pay for a wide range of IRS-approved healthcare expenses, whether your insurer covers those costs or not. And I'll give you some examples of eligible healthcare costs that may surprise you in just a moment. Depending on your income tax rate, using an HSA to pay qualified expenses tax-free could mean getting a 20%, even maybe up to a 30% discount on those costs. Again, it depends on what your average tax rate is. Throughout your lifetime, that could add up to some significant tax savings. Until you turn 65, you can only use HSA funds for qualified, unreimbursed healthcare expenses, or you must pay income taxes plus a hefty 20% penalty. For instance, using an HSA for a vacation or groceries before age 65 means you must pay income tax plus an additional 20% penalty on withdrawn amounts. Now, in addition to all these great tax benefits, I'm going to give you some even more benefits that you get with an HSA. One is that there's no spending deadline. Funds stay in the account and just roll over year to year indefinitely with no penalty if you don't spend them. Another feature is that they're pretty flexible. You can reimburse yourself from the account for a qualified expense at any time in the future. So you just need to keep good records if that's your plan. Funds can be used for qualified healthcare expenses for you, a spouse, and any of your dependent children or parents. And your initial funding can be a tax-free rollover from an IRA, a traditional IRA, putting that money from the traditional IRA, rolling it over to the HSA, of course, up to the annual contribution limit. You can do that once in your lifetime to fund it. And contributions can come from family members or even an employer, and you can claim a tax deduction for those contributions from other people, even if you don't itemize deductions. And contributions can come through payroll deductions if they're offered through an employer. They're not tax deductible, but they would get excluded from your gross income, allowing you to skip not only federal and state taxes, but also Social Security and Medicare taxes. And any employer contributions are not included in your taxable income. So those could be just contributions they're pulling from your paycheck, or things like matching, or just sort of like a bonus that they are doing, giving you contributions. And if you pay a qualified expense with cash or from a personal account, like your personal checking account, you can reimburse yourself from your HSA. And as I mentioned, you could do that in the future, or you could do that reimbursement right away. No other account offers all these great benefits and tax advantages. So let's talk about who qualifies for these wonderful accounts. I did mention that you need an HSA qualified health plan to be eligible to contribute to an HSA. These plans typically charge lower premiums because they come with higher deductibles. They're known as high deductible health plans. So remember that your deductible is the amount you have to pay out of pocket for covered costs before your insurance benefits begin each year. So, there's a trade-off. Those lower premiums mean you're taking on more responsibility for covered costs in the form of that deductible. And if you want to reduce your deductible, generally that means you're going to be paying higher premiums. So HSA qualified plans have become more popular as people have wanted to pay less for premiums, but they're not right for everybody. You really have to make sure that you're going to get the best value out of that plan based on your health and your family's health and how you use it. You can purchase an HSA qualified health plan through your employer, typically, or independently, such as through healthcare.gov or a state insurance marketplace, or even a private insurance broker. Some employers offer an HSA with a particular institution. However, you can open an HSA with any institution you like and even roll over funds from one to another if you want to change banks or institutions. If you open an HSA through work, and let's say you change jobs or maybe you become unemployed, you can continue using the same account or even roll over funds to an HSA at a different institution. And even if you lose HSA eligible insurance, you can continue spending your HSA balance. However, you won't be eligible to make any new contributions. Again, you've got to have that HSA plan in place. You've got to be paying for that in order to qualify to make contributions to an HSA. So if you have an HSA, but you enroll in a health plan that is not HSA qualified, maybe you decide to enroll in a spouse's PPO, or it's time for you to enroll in Medicare. At that point, you would be not eligible to make new HSA contributions. However, you can keep spending any existing HSA balance and use it for healthcare expenses for yourself, your spouse, and any dependents. And similar to a retirement account, you can only own an HSA as an individual. There is no such thing as a joint HSA. So let's talk about the rules for contributing. In general, you can contribute a little bit more each year. It seems like the annual limits have crept up just a little bit from year to year. So for 2025, you can contribute up to $4,300 to an HSA if you have individual health coverage. So that's, just coverage for yourself, or $8,550 if you have a family plan. So that means maybe you've got a spouse and kids, more than just you on the plan. And if you're over 55, you can contribute an additional $1,000 as a catch-up amount with either the individual or family type of health plan. For 2026, the HSA contribution limit for individual coverage will increase just a little bit from $4,300 up to $4,400. And the family cap is going to go from $8,550 up to $8,750. And that $1,000 catch-up contribution remains the same for those over age 55. Now, since these limits that I'm giving you are the total limits for the account, be mindful of these limits if someone else contributes to your account. For example, if your employer contributes $1,000 to your account, like as a benefit of being employed, and you're under 55 and you've got an individual plan, that would mean you can only contribute the balance of $3,300. This is for the 2025 limits. So again, it's not like you can exceed the annual contribution limits like you can with a retirement account. You do have to keep in mind these are the total limits. And you can make tax-deductible contributions anytime during the year, even up to April 15 or tax day for the previous year. But you're never required to contribute to an HSA in any year. Now, I mentioned that the rules change after age 65, and when that happens, you can spend an HSA on non-qualified expenses without paying a 20% penalty. Be advised, though, that you still must pay income tax on those withdrawn amounts. So you're not going to get them, tax-free, but you will get them penalty-free. But that's still a great reason to max out an HSA annually, even if you don't expect many healthcare expenses. However, once you enroll in Medicare, which is typically at age 65, I mentioned that you're no longer eligible to make new HSA contributions. So remember that. A lot of retirees kind of forget about that and end up continuing to contribute to their HSA, and then, they've got to back it all out. So just remember that once you're in Medicare, you are no longer eligible to contribute to an HSA. So let's go through some qualified HSA expenses. So these are some things that you can purchase and spend with your HSA money. It really includes a very wide range of unreimbursed healthcare costs that you incur. Again, it's for you, your family, a spouse, until, let's say, you meet your annual deductible on your health plan, or for any expenses that are just flat out not covered by health insurance. They do have to pay for healthcare services, equipment, or medications generally. And you can see a complete list of HSA qualified expenses in IRS publication 502 called Medical and Dental Expenses, and I will put a link to that in the show notes. But I'm going to go through 15 ways here to spend your HSA. Number one is pretty obvious. It's medical care. So the cost of a doctor visit, like a copay, an ambulance ride, emergency room care, hospitalization, prescription drugs, birth control, and many other types of medical goods and services can be paid for with an HSA. Number two, medical equipment. So any equipment you need for daily living, like a wheelchair, a walker, crutches, all of that's qualified. Even purchasing a wig at the advice of a physician or a mental health professional can be covered with an HSA. So maybe you have a medical condition that has caused you to lose your hair. In that case, a wig would be covered. Number 3, dental care. Going to the dentist is covered for routine cleanings, fluoride treatments, x-rays, fillings, extractions, dentures, and braces, really anything that you would need at the dentist. However, teeth whitening is not a qualified expense, nor is any cost or therapy that's purely cosmetic. Number 4, vision care. You can use an HSA for contact lenses and glasses, including prescription sunglasses, and even surgery like LASIK or the removal of cataracts. If your sight or hearing is impaired, you can even purchase and care for a guide dog or other service animal with your HSA. Number 5, hearing care. You can use HSA funds to cover the cost of hearing tests and even purchase hearing aids and batteries. Number 6, chiropractic care. All chiropractic care is HSA qualified, even if your insurance doesn't cover it. So that means you can explore this alternative for pain relief before you get medication or surgery. Number 7, acupuncture. Even if your health insurance doesn't cover acupuncture, you can use your HSA to pay for it. Number 8, over-the-counter medications. Now, this has changed from year to year, or not in year to year, but over the years. But now it is a qualified expense. You can buy non-prescription medications like pain relievers, allergy medications, cold and flu medications, sleep aids, eye drops, and even menstrual products using your HSA. Number 9, fertility enhancement. You can use an HSA to pay for any treatment to overcome an inability to have children, such as in vitro fertilization. And once you're a parent, you can also spend it on things like breast pumps and supplies that assist lactation. Or you can use an HSA to go in the opposite direction and pay for sterilization or legal abortion. Number 10, drug and alcohol addiction treatment. Any amount you pay for yourself or a family member for inpatient treatment at a drug rehabilitation center, including meals and lodging, is HSA qualified. You can also pay for transportation to and from Alcoholics Anonymous meetings in your community, assuming a medical provider has deemed them necessary for you. Number 11, care from a psychologist or psychiatrist. You can use HSA funds for the cost to support yourself or a family member whom you claim as a dependent through the treatment of a mental illness. You can use HSA funds to pay for a patient's treatment at a healthcare institution if a physician prescribes it to alleviate a physical or mental disability or illness. Number 12, home improvements. Any special equipment or improvements installed in a home to care for yourself or your dependent family members can be paid for with an HSA if the purpose is medical care. They might include constructing entrance ramps, widening doorways, installing lifts, or lowering cabinets and sinks to make them accessible. Number 13, transportation and travel. So getting to and from medical care, such as on a bus, taxi, train, plane, or ambulance, can be paid for with an HSA. It includes regular visits to see an ill family member if visits are recommended as part of their treatment. You can include lodging, but not meals, when you travel to another city for medical purposes. If you use your vehicle to get to medical services, you can use your HSA money to cover certain out-of-pocket costs, including gas, oil, tolls, and parking fees, but you can't cover general vehicle maintenance or insurance costs. Number 14, long-term care. You can pay long-term care costs like being in an assisted living facility, receiving in-home nursing care, and premiums for long-term care insurance with your HSA. And 15, certain insurance premiums. While you typically can't pay health insurance premiums with an HSA, there are some exceptions. So you can pay for healthcare continuation coverage that's often known as COBRA. After leaving a job, you can use your HSA for those COBRA premium payments. You can pay for health insurance while you're receiving unemployment compensation. So if you're out of work, you're receiving unemployment, that's the time when you can use your HSA to purchase health insurance. And you can pay for Medicare and other coverage after age 65 with your HSA funds. And I am just scratching the surface here with what are the qualified unreimbursed expenses. So, be sure to do a little research and find out the type of service or product that you need. You might be surprised that it is allowable with your HSA. And if you qualify for an HSA, you'll find them, at many local institutions or even online platforms. They function a lot like a checking account. They might give you paper checks, a debit card, and they always have online banking transactions. The unique tax advantages and flexibility of an HSA make it an excellent way to cut the rising cost of healthcare for you and your family. Alternatively, you can consider it more like a medical savings account that's just for the future, leaving your contributions invested and growing to spend them in retirement. Again, there's no deadline for using the funds. So a lot of people just think about this as an investment account and don't reimburse themselves for their medical costs. But reimbursing yourself is also a pretty nice tax benefit. So either way that you use the account, you're going to get some really nice tax savings from it. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast. We've got a really great team that works on the show. Steve Rickyberg audio engineers the podcast. Holly Hutchins is our director of podcasts. Morgan Christensen is our advertising operations specialist. And Nathaniel Hoops is our marketing contractor.